I'm Charlotte McLeod with investingnews.com, and here today with me is Frank Holmes, CEO and CIO at US Global Investors. Thank you so much for being here. Great to have you as always.
Oh, it's a long time no see.
I know we are catching up from our last conversation all the way back at the end of 2024. So we've got so much to go over today. And where I thought we could start is with the gold price. So back when we had that conversation, we were talking about $3,000 gold. And of course, we got there and surpassed it. So if you look at the gold price in 2025, where do you see us heading?
Well, I think it hits 4,000, and before Trump is finished and his term as president, it'll be 6,000. That's where I think it's heading for a host of reasons, which we can share through your questions. Answer them.
Okay, that sounds good. Okay, nice to start with those price targets, gives us an idea of where we're going. And that's one of the things that I wanted to bring up. Of course, a big change since we talked at the end of last year is we have Trump as US president once again. And he's made a lot of promises about streamlining, increasing efficiency. But there's a lot of questions, I think, right now about what's going on because of Elon Musk departing from Doge. We have the big, beautiful bill making progress or trying to. So I want to get your thoughts on what we should take away from all of these developments.
Well, it's so interesting because President Trump was so much against all the regulatory regime in DC, but he's really positioned himself as the global regulator with a tariff war with every country in the world, telling people what they have to spend in NATO, etc. Then there's lots of truth to what his suggestions have been, but he's become as this great regulator, whereas Elon Musk is the innovator. And innovators historically have a clash with regulators. So it's just a matter of time before the bromance went into some friction. And it is what it is. And I think the capital markets, we're going to adjust and adapt. And there's some other bigger things that we have to deal with besides this bromance, which captures all the media. There's much more significant things we have to worry about.
Yeah, what are you looking at there that is more significant that we should be aware of? Because it's so true that all the media attention does tend to distract from what is really important.
Well, I think that Xi Jinping was the big regulator for China and went in to reign after all the tech CEOs. Remember, Jack Ma was house detained and almost put in jail. And you're seeing that same battle that's happening with President Trump, with Bezos, and now with Elon Musk. So it's something similar, but really what we have to be concerned about is China. And China's very smart. They have a dictator. They have a long-term vision. So when you put those in place, you're seeing things unfold. How they grew this one road, one belt. At first, I thought it was a brilliant idea, but really it's become a way of introducing communism and supporting it like we've seen in Venezuela. But they have given over $2 trillion to 125 countries out of 194 countries. And they do come in with, if you want more money, you have to be anti-Taiwan, you have to be this, you have to be that. So it's a soft sell, but it's very political. And then the whole thing with Greenland, well, as a Canadian exploration company, I've heard this Greenland for like 35 years. Of raising money to go up in Greenland looking for strategic minerals and gold. So I thought it was interesting when Trump wanted it, but really it's China. China tried to buy a former U.S.-built military, Air Force, and seaport in the southern part of Greenland. The State Department shut them down in 2017. Then they tried to set up strategic mining, metal mining in Greenland, and they got shut down. They have built 5 icebreakers. They say the Arctic is theirs. Remember, there's a big gas discovery along the border of Canada and Alaska. And the Chinese are saying this is theirs. And now we have Russia with something like 35 icebreakers. Canada and the U.S. collectively might have 5. It's a big, big difference. So those dynamics are important to see that China is controlling all the seaports. Panama was really by Hutchinson Wampo. It was the richest guy in Hong Kong, Li Kai-shing. But it was that the Chinese bought an island in the Caribbean at the mouth of Panama to start building like a military base, like they've done in the Philippines. That was the concern. So we don't get the full story, but US Global, we came up with a new product called WAR, and it's AI on the rebuilding of military. So we started delving into these because it was gold, the fear trade, that took me over to what's taking place in these dynamics. And China, what we've seen in the past 25 years, have gone through this economic miracle, but they've ignored all the NGOs. All the NGO complaints, green mining's bad. It's all pro-green in America, UK, Canada. So what's happened is that investors have dropped their percentage of overall public markets in mining to about 2% from about 11%. China's ignored all the green NGO movement. And now, if you see what they've done in Africa and what they're buying in Latin America, they're the biggest consumer of metals, but they control right from the ground over. They're the biggest gold producer in the world. They are the biggest gold buyer to try to legitimize their currency. So this is geopolitical, and they're using this to weaponize for de-dollarization against the US dollar. And I think it's just slowly going to unfold. We're seeing that as a percentage, as the dollar is losing some of its credibility. The negative sentiment about the tariff war with every country in the world doesn't help the U.S. agenda. If it's one or two countries, you understand that. But when you take on the whole world, it creates this dynamic that says gold, and more central bankers are buying gold, and China's having a stronger soft influence around the world. So this is what changes those dynamics. And when I was mentioning, I wrote about a company last week that's up 2,000%, and it has to do with the love trade, which I've always spoken about, that 60% of gold demand is love. And you can see that what's taking place with 24 karat jewelry in China, how successful it's been. And I think that gold is going to test, because just of the policies coming out of the White House are just making it more challenging for governments around the world to keep resetting what this trade war is all about. And I think what's interesting to me is that I have another ETF, Charlotte, that's called C, and it tracks all the shipping in the world, because cargo, most commodities are shipped by ships in the ocean, and 80% of all global trade are by ships. So I want to have one smart beta 2.0 way to look at the global, and I shut down my international mutual funds, emerging market funds, and I said, let's just look at this, because it captures all the trade between China and the rest of the world and America, all within one. So I am tracking what's happening around the sea. I am tracking what's happening in the world of AI to rebuild their military, both in Europe and here. And it's interesting enough, military stocks in America, cybersecurity, etc., they're up 15% year to date, where the market's down. Gold has done, and gold stocks have done spectacularly well. The EBITDA on these companies is a home run. My GoAU ETF at an all-time high. So I think, it's interesting times, but I'm trying to keep my hands on what's moving the sea and the cargo, and it's above its 50-day moving average. So there's trade going on, even though trade between China and America has dropped dramatically, but the rest of the world, its trade is on. And I have the JETS ETF, as you know, and it gives me a flavor for the global economy, because there's so much negative news. But the airlines are doing exceptionally well. And so it's not, when we just take a look at happened in China, 6% growth month over month in airline travel and tourism. Southwest Airlines just cut a deal with China for when people land from North America into North America, they will use Southwest Airlines. So I say something else is happening besides the fear trade over here, that C is above the 50-day, which is telling me that shipping is doing well. Last year, these cargo ships paid an 18% dividend. So I scratch my head and say, well, they're okay. tourism is okay. They're making big cash flow, and there's now this new weaponization of using AI. That's in full throttle. But China, with the BRICS, is really doing everything they can to de-dollarize the US dollar for trade. And that impacts the value of the dollar versus gold. So I remain so bullish on gold, bullish on tourism and cargo.
Amazing to see how all of these different factors come together, and it gives a really good idea, I think, of what you're looking at right now. I think it was also valuable to go over what's happening in China. It can be really tough to follow all the threads there. I want to ask you a little bit more about China when it comes to gold, because one of the topics I've been hearing more about lately is that China is looking like it's going to take a more active role in setting the gold price. So curious to get your perspective on that. I know there's been quite a few developments in terms of China and gold in the last little bit.
Well, I think gold is to be decentralized. And if you try to centralize that pricing mechanism, then gold will quickly lose its ability of its pricing mechanism for the global currency. And I think if we look at Bitcoin, what made Bitcoin explode in the past, 10 years has been incredible run when you think about it. And then you tack on the last 5, it's a spectacular run. So why is that? Because it's decentralized. The supply is capped. I think that China can try to influence as much as possible. I think this whole thing, one of your questions was the audit of Fort Knox. Well, just think about that. If this gold is there and they went from $40 valuation to spot, because China is carrying gold, their financials on spot price, mark to market, as they would like to call it. What would happen to the US? All of a sudden, they would have windfall of over $800 billion, which would be an offset when you look at the debt to equity, debt to GDP ratios that everyone likes to float around. And so I think that push has another probability. But in them trying to influence the price of gold, I think they're influencing sheerly because of their demand. This is the year of the snake. So what is the snake? They make it look so beautiful, like Cleopatra, coils going around your hand, or the medical signa, which has the snake in it. You know, it's really quite incredible to see the demand for 24 karat gold jewelry. And it's a real simple model. If you look at China and India, 40% of the world's population, their GDP per capita is rising faster than Europe or America. And 2, there's a cultural affinity for gold. And that's what's been the underlying bid. As the GDP per capita this century has been rising for these 2 countries, they always buy when there's a big sell-off. There's a natural buyer. Whereas before, if you go back to 1985, et cetera, they did not have a big global footprint in this GDP per capita growth. So this has been very significant in gold going to trade higher. And then you add in Southeast Asia, Vietnam, Thailand, Malaysia, Indonesia, beautiful, big cultural affinity towards gold. And then the Middle East is the same thing. So I think that gold is going to easily trade to $6,000 an ounce. And I think that I was happy to see that the junior gold stocks in Vancouver have finally had, they're above their 50-day moving average in volume. That's what's really important as a precursor. So I like to look what's called on-balance volume. What is the volume on up days? And then you just subtract the volume on down days, and you get a net negative number or a net positive number. We were living with a net negative number, and it's turned positive. The volume is made an all-time high last week. So this is very positive and constructive. The gold stock, strangely enough, the GDX and the GDXJ have had nothing but redemptions while the price of gold and the gold stocks kept rising. It was a weird thing that the people were just disassociating, understanding what gold is and gold stocks. But that's changed now. So we're starting to see that demand. I was happy that our ETFs did not experience in the gold space, what some of the other groups did. And I think that we are in this wonderful bull market. And if you look, Charlotte, a year ago's price of gold for this quarter versus today, it's ripping. So that means we're in the month of June from April, May, and June. This quarter is going to be spectacular compared to last year when we look at revenue per share and cash flow per share for the gold mining stocks. The longer they do that, the more they show up in stock screens and more they get picked up by generalists. And I think this quarter is higher than last quarter. So we could see all of a sudden Q over Q, a nice pop in the price of gold stocks and year over year as a big pop. And I was really happy to see last month, out of the 50 best growth stocks in IBD, there were 12 gold stocks. So that is usually a growth stock like a tech momentum where revenue and cash flow are growing faster than the overall economy. That's what's happening with gold. So I remain really constructively and bullish.
Yeah, I definitely had it in mind to ask you what's going on with the gold stocks, because when we talked the last time, they were so undervalued. We were waiting for that reset moment, which it sounds like is starting to play out. So for you, when you look at the gold stocks right now, where do you see the most opportunity?
Well, I think that the ones that are showing the momentum on revenue per share year over year and cash flow, if they're both aligned, they have been the best performing stocks. And the third factor is margin expansion. So the South African gold stocks, when gold went through 3,000, their cash flow, because they're high cost, deep mines, all of a sudden explodes. So we're making a little bit of money. It just falls to the bottom line. And those stocks were ripping when you look at Gold Fields and Harmony. And so it's important to look, they're called the marginal gold producer, but they've done exceptionally well. Newmont's done well for big liquid names, but nothing like these other marginal gold stocks and some of the mid-cap stocks like Ken Ross throwing off buckets of free cash flow, paying down their debt. I think it's really exciting to see how these companies are evolving. But what really surprises me with Newmont buying back so much stock, why don't they just buy gold? I don't understand, the Bitcoin miners, most of them buy Bitcoin because they believe it's going to go up in value. And Michael Saylor has been promoting, and so is Fidelity, which is a massive fund group and brokerage, discount brokerage in America. They've been promoting that all companies own some Bitcoin in addition to their cash. Well, you scratch your head. And I remember so well I remember the 90s, the best performing gold stocks were the ones that had gold in their balance sheet, like I Am Gold. And Rob McEwen, Gold Corp, when he had that, had huge gold holdings on his balance sheet, and they all traded at a higher price to book. So why would Newmont, if it's not going to go buy mid-cap gold producers, why does it put gold on its balance sheet?
Yeah, it's a move that I think would make a whole lot of sense. We've talked about before that hodl gold idea. So I don't know. I guess we'll wait and see if that ends up playing out. In addition to gold, I also wanted to make sure that we touch on silver today, because I know it's been so frustrating for investors, but it's on the move. We've got past 35, past 36. So curious to get your thoughts on whether this is a real breakout in silver or if this is some volatility that will fade away ultimately.
One of the things with silver when we last spoke, it was, as I think I recall, was I said the spot market is much higher than the futures price. So when they're saying to you, silver at that time is $28 or $30, if you try to buy it, you're paying almost $40. Get the delivery. So there is a shortage, and we know that the supply demand, it's running in deficit for many years now. So I think it could easily go to $100. I just think that silver has huge industrial demand. The electrification that's going to take place around the world. It's so bullish for copper. Copper gold porphyry deposits, they're another gem that are deeply undervalued relative to, if you look, and I know this so well from Hive in the Bitcoin mining and also high performance computing, is that when you're in countries like Paraguay that are building out their grid, they need a lot of copper. There's a tremendous amount. And so it's not going to go away. And then if you start looking at technology with solar panels and the other elements, you need a lot of silver. So I think silver is one of those inexpensive coins that you want to be owning them. You want to buy them and give them away as gifts. Do not go and buy something that's going to have no value in a few years, especially for your grandchildren. Buy them a silver coin for their birthday, for their graduation. Buy them a silver coin. They will always keep it for some rainy day.
Yeah, I have taken that idea from you on buying the silver coins. I think it's a great idea. So for those who are feeling maybe a little bit frustrated about silver, what words would you give them?
Pardon me?
What words would you give to people who might be a little bit frustrated about silver right now?
How could you be frustrated? The silver stocks have done well. There's been takeovers in the place. I can't be frustrated with it. I think it just trades higher. And I think the silver stocks will continue. If you take a look at a basket of silver stocks, they've done exceptionally well. They've done mathematically what usually happens for gold. It's a beta 1.5. And what does that mean? It means that if gold goes up, stocks up 10%, silver stocks go up 15%. Gold stocks fall 10%, silver stocks fall 15%. It's always 50% more in that percentage. So I think that silver stocks, I think they're going to just trade higher, and you've got to have the discipline, buy the dip and hold on for dear life. Just don't put all your money in right away. You just nibble away. And I'm very excited to see that Robinhood has come into Canada. Robinhood is a $50 billion market cap company, bigger than many Canadian banks. And Canadian banks have basically frozen out the retail person that's over 65 from speculating in any exploration or silver. And it's okay to go to the casino. It's okay to go to the racetrack. It's okay to buy a lottery ticket. But God forsake, don't you buy an exploration company. And what happens is that they are basically pioneering it, coming with Robinhood. And they have a smaller overall retail account with no commission. They first go in the crypto space. They'll go through the whole process, and they'll make it easier for investors to come in and buy. And I think we'll make a dent into the big banks in Canada, which will help the liquidity. And that liquidity comes from price discovery. So if it's just simple math, if 70% of the wealth in Canada are people over 65, but they're being pushed and not to, for wealth management reasons, not to speculate anything in the stock market. And all of a sudden you turn around and you start changing that, then I think you could turn around and get more price discovery. But where price discovery is really going to happen with a Robinhood is your age, your youthfulness, your friends, because they can all of a sudden buy $500 or $1,000, no commission, and be able to trade like they do in the US. Any of these ETFs or junior stocks that once they get full licenses in Canada. But right now, they've been huge in America, and their success is unprecedented. So I'm happy for this slowly growing, but it's called price discovery.
Yeah, let's definitely keep an eye on how that plays out in Canada. It'll be interesting to watch. So really good idea of what's happening in silver right now. And of course, I have to check up with you on Bitcoin as well. So we've seen ups and downs in the Bitcoin price in 2025, but similar to gold, it's pretty close to its all-time high at the moment. So can you outline the main price drivers that you're watching for Bitcoin right now?
Well, Bitcoin a year ago was 65,000 on average, and 2 years ago it was 24,000. So that's done really well. One of the things I noticed as Hive, as the vice or the executive chair of Hive, it's lagged, but it doesn't make sense to me because this production profile, its revenue growth has all been growing rapidly. I think that what we're seeing in America is that for companies of all of a sudden capture the imagination of big Bitcoin mining in America only. And Hive is not in America. And so that has impacted it's sort of the price discovery. And we couldn't find green energy. It was really hard to get scale in Canada. Ever since Putin invaded Ukraine, protectionism around energy happened all over the world, in particular countries like Sweden. We saw it in Finland and Norway and Canada. Paraguay was just an oasis of surplus green energy, and we're scaling like we've never done before. We're doing about 600,000 revenue a day, and by the fall we'll be at $1 million a day. And Bitcoin trades higher. We're only going to scale with that. So what will happen, I think, with companies like Hive, it'll become in the top, as we 25 exahash is like being a 1 million ounce gold producer. So what you find in gold space is that if you're under 100,000 ounces, that same ounce of gold gets a lower multiple. And when you go through 500,000 ounces of gold production, you get a higher multiple for the same ounce of gold. And when you go through 1 million ounces of gold, you get another big bump. So it's called a value bump that happens with that. And I think that that's where Hive is going to go through. But with that, I see that Bitcoin has all the embedded necessary factors are in place for it to be $250,000, and it's really not difficult to grasp for me taking a look at this adoption and applying Metcalfe's law, because it is capped at 21 million coins. Gold is not capped, so gold goes through a different dynamic, and the growth of wealth with millennials and Generation X, Y, and Z using platforms like Robinhood. I think 25% of Robinhood's profits and revenue comes from crypto, and they come from young traders and investors. So how I see that is that Hive will be repositioned. It will all of a sudden, as it's going through this value bump, and it'll move with the price of Bitcoin substantially. And so I'm thrilled about that. I think what the other part is all these new ETFs have come out on Bitcoin. So the adoption process is growing. Like one of the ones I like is called BTCI. Why? Because it pays a monthly dividend. And I think it's like 16% annualized. And so what's happening in the crypto ecosystem is the volatility of Bitcoin is so great that people create a product and they sell calls against it and they pay out that as dividends. Well, MicroStrategy, I've got something in my throat. Sorry, it's allergies here, allergy season. So I think that you're going to see these products evolve, and it's going to make the crypto ecosystem grow. And I think that gold, at the same time, is going to grow. But the difference between the two of them is that gold is preservation of wealth for 5,000 years. Bitcoin is preservation, but growth. And that's what attracts younger speculators. And last week when I was, or 2 weeks ago in Las Vegas, there was 35,000 investors. And it's the first time I'm usually the oldest guy in the crowd. And it's the first time I saw many people in their 60s and 70s, at least 5,000 people roaming around trying to find out more about what's happening in the Bitcoin ecosystem. But think of that, Charlotte, 35,000 people at $1,000 a ticket. That's a mind-boggling number to me. And it was lots of fanfare. Vice President Vance spoke, said, you know, the Vice President says, I own Bitcoin and I've owned it for a while and I'm still keeping it. And then we have all these policies. So what's happening in America is there's so many pro-Bitcoin policies. And I think that that's another factor that lends for the adoption of Bitcoin. But it doesn't, what's orphan gold. I think that we're going to see that fund flows will go back and forth, but there's no doubt Bitcoin adoption is so fast. If you look at the Bitcoin ETF, it's the fastest growing ETF in a year in the history of all ETFs, that universe. So that adoption is not going away.
I think that gives a really good overview of the Bitcoin landscape right now. And I appreciate the comparisons to gold and gold stocks. It helps me really conceptualize what's going on. I can hear your voice is going, so I don't want to keep you too much longer, but I've got one more question for you. And
Go
it's
ahead.
going back again to that interview we had toward the end of the year. And I asked what will be the best performing asset of 2025. And you stood out from the other people who I asked that question to, and you mentioned data centers. So I wanted to check back in with you on data centers. We've definitely seen some news related in the last weeks and months. So I think people are also wondering, how can I get exposure? So any thoughts on data centers you would leave us with?
Well, I believe there's one data center ETF or two. I think Global X has one, and VanEck. I'm not sure if VanEck has one, but there's no doubt when you buy something like Hive, it's the cheapest of the data centers because it's data center business. If you're going to do Bitcoin mining, it's a data center business, and data centers come in three tiers: one, two, and three. It's $1 million a megawatt of electricity for Bitcoin mining. It's $10 million for AI high performance computing. Big difference. The chips, $3,000, $35,000. So HPC is a big spend. And what you've seen now in the past 6 months is the word sovereign. Sovereign are my country. And you used to remember the sovereign silver coin, the gold coin was a sovereign. Do you trade in sovereigns? Well, sovereign data centers is the word that's being used in Canada, like it's in the US, and we're seeing that in other countries. So the state of Texas government does not want their data in Louisiana or Oklahoma or Colorado. They want it in Texas. Vice versa, the US doesn't want it in Canada. And Canada doesn't want it in the US. So the value of your data centers and source of electricity are only going to rise. And fiber optics, what they call dense fiber optics, and what my experience so far has happened in HPC in New Brunswick is that we have the data center to upgrade to be high performance computing, but the telecom hasn't spent the money to move the data. So you need to have these dense fiber optics and cable, at least the distance between where the data center is and the telecom switching systems. They're so far behind a developed country like Canada to be, so there's a big spend going to go on, and you're going to see it with Bell Canada and other people making what they're going to use this word sovereign data centers as they go to try to do this conversion. And when we saw the whole battle with what percentage are you spending GDP towards military? And Trump went after everyone in Europe, went after Canada. You're not spending enough to deal with cybersecurity hacks. The China's had two big major cybersecurity hacks in America. They're both called typhoons. One's called Salt, which infiltrated all the telecom companies. The other one's called Vault, where the Chinese were controlling and involved with the power stations. So that created this great schism. Well, we're seeing this now, a agenda out of Europe to spend $200 billion on data centers. We're seeing previous Justin Trudeau, and now it's going to be revitalized with Carney, is going to be a huge spend on data centers for high performance computing. And I think that that's where you're going to see the revaluations. And we've seen for a couple of Bitcoin miners, like Riot had aggressive investors come in and tell them to stop Bitcoin mining. You have to convert it to high performance computing. You saw CoreWeave went public, but it was going after Core Scientific, and then they partnered with them to stop any more Bitcoin expansion, go into high performance computing, because there's a great need for the electricity and the land. And so we are in a secular bull market, all driven by AI, and it's not going away.
Okay, I think that's a good overview of what's going on there as well. And I'll keep checking back with you on this because it's something that I'm a little bit less informed about. I think we can wrap it up there unless you had any final points that you would leave investors with right now.
Well, just stay positive. The most important thing, and remember your health before your wealth, and then you'll be very wealthy. Don't make the sacrifices. Take care of your health and stay positive. There's lots of research that shows that the negative news out there, buy the dip.
Amazing. I love that as a point to end on. So thank you so much for coming on. Once again, I'm Charlotte McLeod with investingnews.com, and this is Frank Holmes with US Global Investors.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.